part 7 of this technical analysis basics course. I'm still focusing on price action. The previous videos I went through price action setups, candlestick setups. I'm now moving on to the basics of support and resistance, which is one of my favorite areas of technical analysis. So support and resistance. What is support and resistance? Support and resistance are areas within a market where price is likely to reverse or have some sort of reaction. Support is always below price, so if price comes down and hits a support area, it could then reverse and go up. Resistance is always above price, above the current price. If price comes up and hits a resistance area, it could reverse and come down. So support and resistance are reversal areas. They're areas within a market, prices within a market, where a certain currency pair or financial instrument can change direction. So if you think of an uptrend, prices coming up, it could hit a resistance area, then start downtrending, and vice versa. Price could be downtrending, hit a support area, and reverse and start coming up. So there are areas within the market, and there's going to be a number of videos about support and resistance because there's different types of support and resistance. There's psychological support and resistance, which I'll go through in this video. There's horizontal support and resistance, horizontal areas within a market where price can reverse. There's also diagonal areas within a market where if price reaches that area, it could reverse or have at least some sort of reaction at. Okay, psychological support and resistance. I have a price up here, 99.50. That is a psychological number within a financial market, more specifically in the Forex market. So 99.50. Psychological areas, psychological prices, levels, whatever you want to call it, are key numbers, key prices where people like to get in and out of trades. Because they do that, because people are buying and selling at these key sort of prices, it causes market reaction. If lots of people are buying, say, euro US dollar, and they like the price 99.50, which is a psychological level, they might take profit there. They get out their trades at 99.50. Obviously, the market reacts and the price action shows them exiting their trades. This will make more sense, as this video goes on. So what prices are psychological prices? What levels within a market are psychological levels? Generally speaking, they are prices that end with a 00 or end with a 50. So we have 99.50 at the top here. We have 110 dead 00. So 110 00. 0.75 dead 00. 0.7500. 2.5000. Got just one dead here. 165.50. 375.50. Now, these are not the only psychological levels within a financial market. It is any price that ends with a 00, so 76 dead, or 3 dead, or are 50, so midway between two 00 levels, so a 50 level, 110.50, 150.50. 150 dead, 140. All these are psychological levels where people like to put entries to get into markets and also exits, to get out of a trade. There's psychological levels, and we'll go through some examples. Okay, so this is all you really need to keep in mind is, does it end with a 00? Does it end with a 50? If so, they're psychological levels. They're levels that traders and investors are watching for some sort of price reaction, or their levels that traders and investors have orders at. They're looking to buy at that level or sell at that level. If you ever watch Bloomberg, just something comes to mind now. If you ever watch Bloomberg, if a certain asset is falling or climbing, people on Bloomberg, usually interviewees, will say something like, we're looking to buy at 116. It's a dead psychological level. Or we've been holding for the last 12 months and we think price could move to 3. These are psychological levels. They're dead numbers. Okay, so this is a chart of Euro US dollar. We have a downtrend here. Price is downtrending. And then it's coming up here. So it's bearish over here. And then it becomes bullish. I have marked some psychological levels on this chart. You can see that they end with a 00 or a 50. So let's start at the top here. So we have 114.50. So you can see price comes up to 114.50 and reverses. It comes down. Comes up again to this area and it reverses. It comes down. So each time price reaches this 114.50 area, we have a reaction. Price is reversing off. It's bullish, it becomes bearish. It's bullish, it becomes bearish. We have 111.50 here. Same sort of thing, a reaction. Our reactions. As price reaches this area, we have support, comes up. Price reaches this area, we have resistance, it comes down. So support is always below current price. It makes a bearish move become bullish. Resistance is above price. It makes a bullish move become bearish. So if we just look at these two levels across the screen, you can see that when these Japanese candlesticks are around this level, we get these reversals. And the same with this level here, a reversal, a reversal. Same here, we have 108 dead. So 108. Price is bearish, hits support. Support always pushes price up. Resistance always pushes price down. So price comes down, hits this area, it comes up. It then hits this resistance and comes down. 108, we go across the screen here. Once again, we have this reaction. It's resistance. Bullish move up, bearish move down. So price is reversing. We have this downtrend, we have these waves, we have this step in motion, and these waves are being formed off psychological levels. 104, 00, support, support, resistance. It says price is reaching this area, bearish becomes bullish, support. Bearish becomes bullish, support. Bullish becomes bearish, resistance. 1. That's a real key. Psychological level 1. It's a dead number. Support, resistance. And you can see the price is quite jumpy around this area. There's a lot going on. 96, 0.96. It's a support area. Price comes down, it comes up. Psychological levels end with a 00 or a 50. Not every 50 level is going to see a reaction. Not every 00 level is going to see a reaction. Unfortunately, it's not that easy. But these psychological levels do impact the market and do form part of technical analysis. Now, when support finally breaks, so you can see that this 111.50 here acted as support, didn't act as support here. Price actually moved through that level. Same here, 108.00. With the support, price comes down, reverses at the level. It doesn't reverse again, it actually moves below the level. So these support and resistance levels are not going to hold indefinitely. You might see a reaction at these levels once, twice, thrice, and then it won't hold the market anymore. The support is not strong enough. And the same with resistance. When support becomes So support becomes resistance, and resistance becomes support. So if you do have a support level that breaks, it can then act as resistance. Support level here, it's broken, it's now a resistance. Another way to look at these levels, these psychological levels and support and resistance in general, is ceilings and floors. Floors are support, they support you, they hold you up. Ceilings are above you, they keep you down. Okay, when you move above a ceiling, it becomes a floor. Okay, so the floor you're standing on is the ceiling below you. And the same with moving down. You know, if you're on a floor and you go down a level, that floor has now become a ceiling. So support becomes resistance. Resistance becomes support. And you can see that here. So we have 104 level, acts as support, pushes price up again. When price does break below this level and then test it later on, it's now resistance. So the floor has become a ceiling. And we could flip this chart upside down and I could demonstrate the same thing with resistance becoming support. It's the same principle. So support becomes resistance, resistance becomes support. So what's the key takeaway really from this video? It is support and resistance. Support keeps price up, resistance keeps price down. There's lots of support and resistance. Psychological levels, psychological prices is what I've been through in this video. 0, 0s and 50s. It works. You can see that on this chart here. If a support level does break, it can act as resistance. The floor can become a ceiling. If a resistance breaks, it can become a support. So if the ceiling breaks, it can become a floor. Thank you for watching. As mentioned in previous videos, I know this is a lot to take in. Try and practice on some charts if you can, but rewatch the video again and stick with the course, because I will build on this support and resistance. If it doesn't make complete sense at the moment, just carry on, because there are more videos about support and resistance. The next 2 videos will likely be about support and resistance, and obviously the more content you watch, the more likely it's going to click into place.